All right, so we're going to get started. Thanks everybody for joining. I would like to just start off by expressing our solidarity with everybody through the pandemic. No matter what country we're in, everybody's affected right now, and these are uncertain times. So it's our hope from Invennt that your families, friends, colleagues are all in good health, that you're able to keep your spirits up, and we want to respect everybody's time, so we'll get started. For those of you who don't know, we are a management consultancy, and we focus specifically in the construction sector. My name is Sarah Hall. I'm actually born in Canada. So I was born in Vancouver, British Columbia. I am the communications consultant here at Invennt, and I'll be your host for the webinar. An interesting fact that you may not know about me is that my mom actually worked for the CRA 36 years ago, and back in the 80s, she actually was involved in getting the Shred tax program off the ground. So she worked closely with it over many years of her career, and it's actually quite fitting that I would find myself here working with Canadian companies and helping them get their share of the Shred program. It's kind of ironic as well. I moved to London in April of last year, which is actually around the same time that Invennt began their work in Canada. So that's serendipity at its finest. I come here and they go there. But yeah, it's been a really great experience. Today on the webinar, we have Tim Fitch and Ben Pritchard from Invennt. They're going to be highlighting some specific ways that you can give your business a financial boost during the current crisis, in particularly showing some research that we've done, which really highlights how much money the construction industry is missing out on in claiming Shred tax credits for innovation that they're performing on a daily basis. So we're going to start off with Ben, who's going to introduce various financial aids that are available during the crisis, followed by Tim, who's going to dive into more detail on how you can boost your cash through that flow of innovation. So I'll hand it over to Ben now. Ben?
Thanks, Sarah. Morning, everyone. So as Sarah said, my name's Ben, and I'm a EVP here at Invennt. As Sarah mentioned, we're a specialist management consultancy in construction and the built environment. I mean, what makes us sort of different to most people is we have a wide variety of experiences across the industry, different sectors. Myself personally, I joined Invennt 5 years ago and a week and a half. Before that, I spent a decade in nuclear decommissioning as a commercial and project manager, working out how to retrieve nuclear waste, put it in concrete boxes, and work out how to deal with it for 100 years. So quite a lot of different process and at the heart of it, innovation required. And that's where we see construction really sort of not giving itself a fair deal in terms of the daily challenges that we have to overcome within the industry are often full of innovation and full of opportunity to really demonstrate the value that we can create to the industry and to the economy. And we'll sort of come to that a little bit more later. So Sarah, do you want to, next slide, please? As with governments all around the world, there have been various aid, subsidies and forms of gaining capital that the government in Canada federally have provided. I won't go into the details today. The CRA website, amongst other websites, have got some really good information about how you can access the wage subsidy, the credit availability program, and the emergency business account as many examples. What we're going to focus on primarily today, as Sarah mentioned, are the SR and ED tax credits as an opportunity for construction organisations all over the country to unlock capital and cash at these trying times by being rewarded for some of the excellent things that they have historically done. As Sarah mentioned, the programme has been going since 1984 and was the first of its kind in the world. And since then, around 35 to 40 countries, I think it is, have looked to learn from Canada and see how they can equally attract inward investment through rewarding innovation. What we have found is that very much the SR&D tax credit claims are misunderstood by the construction industry. The rules around what is allowable, what can qualify, are not readily translated into construction language, and vice versa. Construction language isn't readily translatable into to accountancy speak. So there is often a loss in understanding when you have different worlds talking around the same thing. So the SR&ED program has been going for 30 years. It is very generous, and with the last stats, 3.6 billion of relief in 2015 was paid out by the CRA. This year, we were lucky enough as well to form a partnership with the Canadian Construction Association to provide SR&ED services to members across Canada. The CCA, I'm sure a lot of you are aware, is an organisation that champions best practice in construction, tries to share learning, helps to lobby government where appropriate, and really sort of strives to improve construction. So we found ourselves luckily to find a partner who has a similar vision, mission and values to what we have as an organisation, and we together see and value how SR&D credits can really give a financial boost to the construction industry that can hopefully take it to the next level, that we can try and use that additional capital to unlock investment in further technologies, new materials and things like that that we historically haven't been able to. Next slide, please, Sarah. What we have found is because of the way we undertake the work that we do, the fact that we understand construction better than maybe traditional SR&ED specialist companies do, we consistently find more qualifying expenditure than when construction companies are left to their own devices or utilise sort of a traditional and accountant by background. And that's often, as I've said before, because the difference in language and understanding and the general mindset and ethos that we have in construction to downplay what we do. We rarely appreciate how hard some of the things that we do are, and we come on later. Tim will give a few examples of where we might take for granted the engineering principles that we've got that went into projects, but were actually qualifiable SR&ED projects. Next slide. So what does this mean for construction? It's vital for construction companies to do a deeper dive into what they're doing in their daily activities and identify shred accordingly. There is a large gap in what construction companies currently claim and the potential for the industry, and that's the gap that we hope to be able to close over the coming months and years for the Canadian construction industry. And at that point, I'll hand over to Tim, who will expand on how construction companies can use innovation for that financial boost. Tim?
Hello, everyone, and thanks, Ben. So I'm Tim Fitch. I'm the president of Invennt Business Inc., which is our Canadian entity. I'm also a director of the holding company here in the UK. And I suppose there's a story around shred and research and development in general, which is worth sharing because I'm an engineer, not an accountant. I spent the formative years of my career, which is the first 23, working for contractors all over the world, both sort of main contractors and tier 2 specialist subcontractors. I started out, in fact, in geotechnical engineering, but that's what I am. I'm an engineer. Unfortunately, I think like an engineer, and I know how people in construction think and feel about what construction is all about. And when I first came across these tax incentives, it was in the UK. Of course, I could see an opportunity, but when I read the little bit of the tax code that actually applies to the R&D or shred element, of course, I didn't really understand it because I'm an engineer and a construction person, and these documents are written in tax speak. And it actually took me 15 months to sort of translate the essence of the code around these tax incentives and translate it back into a language that engineers, construction people can understand. And once I'd done that, it became clear to me that there was this really massive opportunity for construction businesses to claim this benefit, which they're entitled to do, and therefore get the cash back into their business and use that either to fund further research and development and adoption of new technologies, or maybe in the straitened times that we're in at the moment, it just provides very, very useful working capital at a difficult time. So next slide, please, Sarah. So as I explained, the idea came in a UK business about five or 6 years ago now, but for the past 2 years we've been in Canada, and that really followed a chance encounter with a friend of mine in Vancouver whilst I was on holiday with my family. He asked me what I was up to. I told him what the business was doing. He said, well, what's really adding value now? And I said, well, we're doing these R&D tax credits in the UK. And he said, oh, but there's something called Shred in Canada. It sounds very similar. And of course, the light bulb went off. I came back to the UK. We investigated it. And before the end, this was in April in 18, before the end of that month, we decided to enter the market. We spent May developing our entry plan or strategy. And the first thing we did was come to Toronto in June 18 to make some videos because we found a local partner to help us with the marketing. And it was at that point I started talking to people on the ground about this. And of course, everyone said that if I was right in my assumptions around the claiming of this benefit by Canadian construction companies, there was a potential massive benefit to the industry. Because what we found out when we've done our market analysis was the CRA issues statistics about how they've divided this pie up. Now, as Ben said, somewhere around $3.5 to $3.6 billion a year are paid out. But at the last statistics which were available, it was only 0.7% of that was going to construction. As we all know, construction's, depending how much of the add-on bits you count, is somewhere between 8 and 10% of the economy. And therefore, it should be getting much more than 0.1% of the pie. And that's really the gap we're trying to close so that Canadian industry, construction industry, can avail itself of this cash injection and go on to greater and better things. So they can reinvest that money in further development, or in these times, use it as working capital just to get through difficult times with the COVID crisis. So, next slide, please. So, in a sense, there's the good news. The CRA has been running this program now for over nearly 36 years. I think it's the 36th year, and it's been tremendously successful. And of course, other countries, as Ben mentioned, have adopted it because countries now have to compete internationally on a tax platform. And this is where Canada is actually the market leader, because the Shred program in Canada is the most generous we've come across. It's certainly significantly more generous than the UK. So, just a couple of other things. What constitutes, in round terms, what is it in construction that we should be looking for? And of course, in this slide here, we've highlighted the four main areas that can be classified as qualifying activities. So I'll very quickly run over them. So the first one is extend overall knowledge or capability in a field of science or technology. Now, you may think that this doesn't apply in construction or for most construction companies, but I've got some real live examples coming up in a few slides' time, you'll be glad to know, that illustrate how these apply. Secondly, create a process or service that extends knowledge or capability. This is much more familiar territory for construction businesses or consultants or architects or suppliers or even off-site manufacturers. You're always innovating around process to make yourself more efficient. Some of that counts. Thirdly, using science or technology to duplicate an existing process, material, device in a new and improved way. So, of course, nowadays with 3D modeling and things like that, many businesses are using this to improve production processes, working methods on sites, method statements, things of that nature. Or, of course, even an appreciable improvement to an existing process, material, service. So they're fairly broad, these definitions, but it's understanding how that fits into the construction context, which is where we know that we have a superior insight, because as we'll come on to later, the business is run by, well, I say veteran construction people, and all of our frontline troops who do the work on our behalf are all either engineers, architects, commercial people, and every single one of them has got significant experience in the industry, and now of course, of making these claims on both sides of the Atlantic. So next slide, please, Sarah. Thank you. So really, in broad terms, I'll just quickly repeat myself. How's this relevant to construction? Well, those things, it's really around how do you overcome the contextual obstacles that you find on every construction project, whether it be at the design phase or during the construction phase. But every single project has a degree of uniqueness, and contextually they're all different. So there's different constraints, there's different unknowns and obstacles and risks, technical risks that we spend our entire careers overcoming. And what the tax code or the Shred guidelines tell us is that some of that activity qualifies as Shred, and therefore, as long as we can quantify and articulate what it was that was done by a particular business, then there is a valid claim. So that's one way, overcoming the obstacles you find on every project. Others are finding easier, safer, greener ways of working and tackling the obstacles that we come across, which I've already mentioned. But how do we do this? So our process, it's a 5-step process. It's simple. We do the vast majority of the work, all the heavy lifting. And nowadays, when we've tested this over the past 7 or 8 weeks during the crisis, we can conduct everything remotely, either by Microsoft Teams or in this case, Zoom. And it's an extremely efficient process. So the first thing that we would do, because the Shred program looks back in time, you can go back up to 2 years, depending on the time of year when your business year end is, and look at the projects that you've spent money on. It's got nothing to do really with profits, and it's got nothing to do with revenue, it's costs. So we will look at the projects that you've been involved with you over those past 2 years, and together we'll ascertain which ones are the most innovative. And from that, we'll see where the best places it's worth our while and yours to take a deeper dive on those projects. Once we've ascertained that, we then do a quick contractual review to make sure you are carrying the risk and that you own the IP. In most cases, this is a formality. Next job is detailed evidence gathering. That might involve us with having a half-hour one-on-one type conversation with someone who knows the details on a particular project. It usually doesn't take longer than half an hour. And then we need to gather some information, which usually is nothing more than you giving us some copies of documents that you've already produced, reports, drawings, analyses, things of that nature, as evidence of the activity you've undertaken. And then we can do the technical write-up. Then the final part is you give us some access to your cost information, and we do the quantification. And from that gives us all of the material that you need to update your corporate tax form with the CRA, which is a fairly quick process for your accountant to undertake. And then the clock's ticking. You've made the application, and the CRA will process that. Now, Ben, I think, has got some recent news around some lobbying that's going on. Can you just let everyone know what you've heard, Ben, about the speed of processing?
The technology, the TCI, I can't remember what the abbreviation stands for, but they are trying to lobby government to release SHRED funding quicker than normal, so making auditing retrospective rather than a step before the money flows to you. So no confirmation one way or the other, although I did hear of a few organisations who have been paid this week that made submissions at the beginning of the month. So the CRA are certainly doing their part, it would seem, in trying to support industries and the economy at this time by speeding the process up, which is great news.
Yeah, so that's very positive. And so what we believe, what we're seeing is that the government and the CRA see this as a means of getting badly needed cash back into industry through an existing mechanism, which is making a valid SHRED claim to the CRA, and then you're due that money. It's you're entitled to it. It's tax you've either overpaid or it comes back anyway, even if you were loss making in a particular year. So this is a really great existing program, which we understand is going to be accelerated in terms of the processing to help Canadian businesses get new cash into their organisations. Now, we spoke briefly about the fact that our business we only look at the construction and built environment sector, so we're completely focused. And as I said, we're made up of industry experts and veterans in my case. What we have done is that we've gathered lots of data over the times about the claims that we're making, and we've got anonymised data for claims that others have made using either they've made the claims on their own account or using a more general advisor. And on this graph, you can see that the y-axis is really looking at the scale of businesses. So that's roughly turnover related information on the bottom in millions of dollars. And the y-axis is the sorts of levels of claims that people have been experiencing depending on scale. These are all in the construction sector. And there's a very significant delta between what the anonymised data of companies were getting on their using either making the claims themselves or using their own advisors, and the red, which is a cohort of 50 of our clients, which really we think is prima facie evidence that having the specialist construction expertise can get you a significantly better claim. In this data, saying around about 40 to 42% better. So that's good news for everyone. I think it's a demonstration of value. And of course, our fee is completely contingent on the outcome for our clients. So, you know, if you typically in Canada, if you claim $1,000 of qualifying cost, there are a few ifs, buts, and maybes, but you might expect to get 35% of that back. Then our fee would be a percentage of that benefit that you receive from the CRA. So it's completely contingent, and so therefore it's a very low risk service. So very quickly, I know everyone's interested in example claims. I've got a few here which I'll run through very quickly. It gives you an idea of some successful claims we've been involved with over the past year, 18 months in Canada. So case history number one was a specialist off-site manufacturer. This particular business produced precast concrete and looked into developing a new housing product focused upon achieving a net zero carbon operational performance. So this particular business, I mean, the actual numbers, as you can imagine, are confidential, but they got a very significant six-figure sum back from the CRA, and they've used that to reinvest in taking this product to the next level of its development. And of course, that's going to create a very significant competitive advantage for them. And of course, it's also, in the longer run, you're producing something which is a benefit to society and, in this case, the environment in particular. Next one, please, Sarah. Again, this is another off-site manufacturer. In this case, it was a precast car parking structure, and they had developed a way of slashing the time and cost to create significant car parking capacity. And in fact, there was a lot of sub-projects within this particular one, including ways of delivering materials to site in a safer and more effective way. In this case, they had a specialist piece of plant, a low loader that they developed that allowed the materials to be offloaded 85% quicker than the older methods. And again, a significant claim was successful. And of course, again, this has been reinvested by this particular business in increasing their capacity and been tremendous benefit to them. Number three, please, Sarah. Here we go. This was a specialist building contractor who was involved in the redevelopment of wastewater treatment plants. So this is a more civil engineering and water treatment specialist. They came up with a bespoke temporary system to ensure that the existing treatment process did not stop during the upgrade and redevelopment of the plant. So these are, you can imagine this particular situation was very unique, but project level, project based. And they had a successful claim, and there was a significant cash return to the business. And what we noticed with this particular company, our process of uncovering this SR&ED activity, there was a very significant uptick in morale amongst the engineers and commercial people we spoke to, because people in this industry, yeah, you work day in, day out solving problems, and when you find out that the government and the CRA actually value what you've done and class it as research and development, people got excited about that, and we saw people getting excited, energized, big uptick in morale, which is an unexpected benefit for everyone. Number four, Sarah. So this was an interesting one where we had a small manufacturer who came up with they actually came up with transferring technology from one sector to another. So these people have brought some oil and gas technology into the construction sector. In this case, it was in Ontario, where this particular type of which is MIG welding had never been used or approved for use in construction before, although it was common practice in oil and gas. And they went through the whole process of getting this approved, lots of test pieces, procedures and everything else, and went through that with the Ontario authorities. And of course, it was a very significant claim for them because it was a relatively small business, and of course gave them significant working capital so they could expand their business. So that was an interesting one. Next one. I think this is number 5, is the last one we're going to talk about today. And again, this is another wastewater example. So this one was a leading general contractor, and they developed a solution for the use of wastewater treatment technology not previously used in Canada. So this is another example of transfer of technology. And of course, this was transferred from in this case, a country where it has a warmer climate, and they had to make it work in the cooler climes, particularly in the winter in Canada. All sorts of difficulties overcome, and of course, this was a great example which resulted in a good claim for this particular business, and of course went straight to the bottom line. So, what's next? If this has been of interest and you'd like to discuss whether or not your particular business, and of course this could be a contractor of all scales and sizes, all are eligible as long as you're you pay Canadian taxes. You're eligible, whether you're a contractor, a subcontractor, or an engineering consultant of any type, an architect. It's likely that you've got some form of claim. But what we don't know, and what we can't say, is whether it's going to be a small, medium, or a tremendous claim. That's what our process uncovers. But if you'd like no obligation exploratory review or discussion, you can just go to our website, which is www.invennt.com, or email me direct. My email is there, tim.fitch@invennt.com, and we can fix up a Teams video meeting and discuss your particular case and see whether or not we can get you a cash injection. So, finally, the last slide is one I'm very proud of. This is our team, some of whom are resident in Canada. Couture is, and right on the far side is Stephen. The rest of us are in the UK, but as Sarah said, she's also Canadian. So we have an office in Toronto. Couture's our absolute 100% full-time shred expert. Before joining us, she worked for a very well-known, massive Canadian business, and have done the internal shred claims for 15 years and has the most extensive experience and knowledge of shred in this sector, I'm sure, of anyone in Canada. So, next slide is for those that are interested. We run a regular podcast, which we call the Construction Big Breakfast. It's available to download. Sarah will tell you all the places you can find it, or you can find our YouTube channel, which will be just search for Invennt on YouTube, or please, we've got hiccups, or the Construction Big Breakfast. There's masses of content. They are fun, amusing chats. We have interesting guests from all over the world, including people recently from Canada. It's good fun, and there's some really interesting insights into all sorts of technology and new stuff that's happening in construction around the world. And finally, it's Q&A time. So Sarah's going to moderate this. And if anyone's got any questions, we'll try our best to answer them. And so,
great.
If there's any questions.
Thank you, Tim. Thank you, Ben. That was really insightful. Look into the industry and innovation that's going on. I had one question pop through while we were talking, and can they claim a scientific research and experimental development tax credit claim as well as applying for a business loan during the COVID crisis?
But the straight answer to that is yes, because it's an existing mechanism within the tax code. As we said, it's been around for 36 years now. Also, the thing about shred claims is they're looking backwards. So you look backwards on money you've already spent. It's nothing to do with how much you've earned or profits or anything like that. It's about money you've spent in any particular fiscal year. And we uncover how much of that cost that you've incurred qualifies for a shred credit and make that on your behalf. And it's an update to your prior year's T2, which is your corporate tax code, form. So it's independent of all of the others. So it doesn't affect any other claims you might be making. It stands out on its own. Hopefully that's clear.
Wonderful. Does anybody else have any other questions?
I just saw one come in from David around how quickly companies might receive a credit with the changes indicated. So the honest answer is we don't know for sure yet. There is a COVID-19 Slack channel that I'm part of, and I've seen a number of organizations on there say that they're getting their credits paid out within the month. So that seems to be the story around the campfire at the moment.
Yeah, I think that's a good news story. That's at the moment it is on the grapevine type stuff. And I think that the other question that we often get asked is how long does our process take? And what we can say is, obviously it depends on the scale and complexity of the particular case, and our standard bugbear is we can work our process relatively quickly, but it's obviously dependent on how quickly our clients respond to us for requests for information. Now, just to make it absolutely clear, we don't ever ask anyone to produce anything new. There's no creativity required on the part of our clients. We're only investigating work you've already done and the evidence you will already have by means of drawings, reports, calculations, and the like that you've already got. It's in your data. It's in your cloud system somewhere. We just need copies of that so that we can evidence the shred activity. And then, of course, we need access to your costs so that we can quantify it. If that can be done relatively quickly, we can turn around the claims in matters of a few weeks, even from reasonably large businesses, just as long as we get that engagement. So, if your so the other key is, the number of years you can claim depends on when your year end is. So if your year end, we're just talking to someone this afternoon, their year end was the end of March. They've got 6 months to file their tax return for this particular year. And they've got until that 6 months, so that'll be the end of September. And you still, after you've filed your tax return, you have a further year at which point during which you can adjust it. So that means that for this particular client, we could revise their T2 for the year ending March 2019 and prepare a shred claim for their year ending March 2020 in the same process. And so and all of that has to be done before September. So in their case, we would do the 19 claim. They can then revise the T2 that's already been submitted last September. And that's in process, and hopefully the CRA will review it and pay out quickly. And then when they submit their 2020 tax return, which has to be done before the end of September, they can add in the shred claim at the same time. So in their case, we could do 2 years together. Hopefully that's helpful.
Great, thank you. We've got a few more questions popping in. Somebody's asked, will my business receive a tax audit if I apply for a SR&ED claim?
Not necessarily a tax audit, but the CRA to differing degrees will review your shred claim. Depending on the size of claim and things like that, it might be an audit of the claim, it might be a sort of desktop review, it might be a conversation. There are different sort of levels. The important thing for our clients to know is that we'll be there to support them through that, make sure they are prepared for it, and ultimately we do our best to make sure that everything that goes forward is robust and allowable in the CRA's eyes. So that's the process at the moment. As I mentioned earlier, there is lobbying currently ongoing to try and make those audits retrospective, but that is still at the moment wishful thinking in many ways.
Awesome.
Yeah, I'll just echo what Ben said, that our service and the fee covers any interactions with the CRA and also the preparation for any meetings and things like that you may have.
Right. And okay, great. Thank you for that. Two other questions that just popped in. So can you claim subcontractor costs?
Yeah, sometimes. So there are, depends obviously on what they do, your relationship with them, and where those subcontractors are based. So generally speaking, if the cost is accounted for outside of Canada, then more than likely you would not be able to claim it. So there are varying things that we would have to review, but the principle is you can claim subcontract costs, but there are a number of reasons why it might be disallowed.
Great. And one final question before we wrap up. If a company isn't profitable and hasn't paid any taxes yet, can it still make a claim?
Yes.
The answer is yes, yeah.
Yes, yes. Awesome. So whether you're loss making or profit making, you can make a claim, which is great news. So I want to thank everybody for joining us today. We're going to wrap it up here. If you have any other further questions that we didn't get a chance to answer, you can shoot us an email at info@invennt.com or pop over to our website, which is www.invennt.com. And please do check out our podcast. We're happy to have people join as guests. We have some really interesting topics that we talk about, as Tim was mentioning. So check us out on YouTube, iTunes, and any other podcast feeds. We're all over the place. And we look forward to getting in touch and chatting with you more. Thank you so much. And we will see you on the next webinar.
Bye.